Stocks like GAIL, IGL, Mahanagar Gas, GSPL all climb after the Petroleum and Natural Gas Regulatory Board gets suggestions from the industry on tariff regulations. CLSA says this could pave the way for higher tariffs for GSPL and GAIL. The spate of order wins continues, and this morning we have NCC, Power Mech and RailTel, all of them rallying today on the back of order wins. NCC has gotten an order worth nearly 1,500 crore rupees, while Power Mech has bagged an order worth 600 crore rupees. RailTel, on the other hand, has won an order worth 25 crores. EPAC climbs nearly 4%. The government is set to disperse the second round of incentives for white goods under the PLI scheme. DLF2 trades higher today after the company met in its analyst meet and said that their new sales bookings are expected to remain steady. Jefferies remains bullish. They have a target price of 1,000 rupees on the share. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio, and what a Monday morning we're having. 200 points on the Nifty, firmly above the 100-day moving average, as well as the 20-day moving average and the 50-day moving average as well. What's important is, can we go past that 24,000 mark in this series itself or not on the Nifty? That's something that we'll track. The Nifty Bank doing a shade better, well above the 200-day moving average for that index, up 1,000 points. And we have the mid-caps, which continue their outperformance, all of them from last week itself. So it's 2,100 stocks which are in the green for about 560 which are in the red right now. And among the stocks which are in the green, the most notable of them are the ones that belong to the gas space, the oil and gas space. And this because the Natural Gas Regulatory Authority is looking to amend its tariff regulations. It's invited industry suggestions for the same as well by the 11th of April. To discuss this further, we are now joined exclusively by the member at the PNGRB, the Petroleum and Natural Gas Regulatory Board, Mr. Gajendra Singh. Thanks a lot, Mr. Singh, for taking our call. And, that's absolutely the first question. Can we expect an increase in tariffs for gas pipeline following the changes that you've made in this, like the claim of price for contractual LNG, etc.? Because that's what the street is expecting right now.
The PNGRB board's focus is that how we can make the gas usage, how we can boost the gas usage all across country. Particularly the unified tariff, what it was particularly in existing, currently have the 3 zones. Now we want to make it a 2 zone. And in Zone 1 tariff, that will be applicable to all CGD all across country. Because the CGD entity, what we are seeing, the growth is, annual growth, if we see it is 11 to 12%. So our focus is that the CGD entity, which is far-flung area, may be paying a Zone 3 tariff, which was very high, 105 plus. And the Zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the Zone 1 tariff, and the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefited. Yeah.
All right, CNG and PNG will get benefited. I know you have a stated objective of taking gas to 15% of the energy mix by 2030, and these are steps in that direction itself. I have a two-part question. One, would this lower prices for end consumers, or maybe this benefit could improve the margins for the company itself? That's point number one. And secondly, are there any further regulatory reforms that we can anticipate in the very near future? What kind of feedback are you expecting from the industry?
No, like currently what we have seen, that we have taken a feedback. There is an industry committee. We have taken their inputs. Based on that, this public consultation document now have published. Now we will take the comments of all stockholders, all stakeholders, whatever the consumers or the supplier or the traders, everyone will, they will give their comments. Based on them, then we will finalize what all basically is to be, there will be in final document.
All right. And the volume assumption, relaxation beyond the 75% threshold, could you elaborate a little about, on the thinking about this, behind this move?
Yeah, but like normative volume, we were taking 75%, but there are the few entities or there are the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. So that way also there's a thought process that if it gets through public consultation and all other things, then we will take this to the final regulation.
Right. And, I'm looking at a couple of expert notes, analyst notes, and one of them is CLSA, which points out that industrial gas users might actually see a cost hike. Should industries base for higher gas prices, or do you think the long-term benefits will outweigh the near-term costs?
No, I don't think there will be a very big change into the tariff, because what we are saying, there are the number of industry customers which are falling in Zone 3 and Zone 2 may be paying the higher tariff. Or even if you see the consumers which are there in Zone 1, particularly say if you take a consumer of Gujarat and Maharashtra, where they are near the source, but they may be taking a gas from different other places. Like if you're taking a gas from KG Basin, so for them it is a Zone 3. The volume in Gujarat is not that they are taking only for Zone 1, they are paying only Zone 1. They are paying even Zone 3 for the volume which is coming from KGD6 basin or other document or other volumes which are coming from other sources. So in one particular area, whether it is Gujarat, whether it is Maharashtra, which are near to source, it's not like that they are always paying Zone 1. So, and on the Zone 3 side, the entities which are far-flung, which are paying a tariff of Zone 3, 105 rupees plus, they will now have to pay, particularly for CNG, PNG, they have to pay the lower tariff. But yes, as you are saying, the Zone 3 now will come down, Zone 3 will get benefited, Zone 2 will be almost remain same, and Zone 1 will be slightly up. So that way the tariff will be there, applicable. That's what we have come out. And we'll see how it will go through after having a public consultation.
All right, and finally,
or loading to the industry consumers.
All right, and finally, if you could, to wrap it up for all our viewers, elaborate some of the major changes that you would like to achieve through these regulations. If you could give us one or two broad points, apart from, what we've discussed so far. One is claiming the LNG cost. The second is relaxation of volume, norms beyond 75%. And the third one, of course, is unifying the tariffs between Zone 3 and Zone 2 as well. Any other thing that we may have missed out on?
And only another thing is the isolated field. There are the number of isolated field where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs. So then isolated field, wherever the pipelines are there, and now they have volume is still existing from those isolated fields, so they will get a better tariff, particularly not to that to load to the consumer, but they should have an operating cost recovered.
All right, take that point. Thanks a lot, sir, for joining in and answering all our questions. We leave you with a promise that once after 11th April you get all the industry feedback as well. You'll join us once again to tell us what was the feedback that was achieved and what were the changes that you had made to this policy as well. Thank you so much for joining us. The street is listening in to what you're saying. With that, we'll slip into a short break. Come back on the other side. We'll get you an exclusive conversation with the leadership of Pidilite discussing the change of guard, the new market forays of the company, and the near-term consumer sector outlook as well. Stay tuned for that. Welcome back. On a good day for the markets, let's get in some important corporate conversation. Pidilite's leadership, both the outgoing MD and CEO Bharat Puri as well as the MD CEO designate Sudhanshu Vats spoke exclusively to me about the company's business plans going forward. This after they held an analyst meet last week as well. So let's listen into what they had to say specifically on Pidilite's foray into the paints and also the resurgence in rural demand. This is a CNBC-TV18 exclusive.
We believe we have a right to win in small town and rural India. That's exactly what we're doing. We're steadily making progress, getting our model right. We're still in the southern states, the 4 southern states. We haven't expanded beyond. And we'll get the model right, be clear that this pilot works before we cut, copy, paste to the rest. But as we've always said, listen, paints today is anywhere between 60 and 80,000 crores, depending on who estimates the category. 30% of that is small town and rural. If you're a top 3 player, and frankly, when you go to these markets, there are not more than 3 players there anyway, that itself is a substantial driver of growth for us, and also is a much better profit pool than the urban markets.
The obvious question is, what took you all so long, one, in entering this category? Because the obvious correlation was there until then. And what have your learnings about this industry been through the pilot that you've come up with?
I think it is one of the large consumer categories of India, which has also got a promise of growing in double digits. So I think that's a given, whether urban or rural. Now, within that also, to Bharat's point, I think our belief is, and that to the timing there, our belief is that the small town India and rural India, which traditionally had much lower per capita incomes and therefore was traditionally a smaller market, and if I could use the word, marginally ignored market by the existing traditional players, because the market was largely urban, was not perhaps ready that much. Our belief is, and you can see that, Mangalam, in many categories, I believe the action is now shifting a lot more to small town and rural India. We believe while this is a smaller pie of the market, as Bharat just told you, 30%, but it may arguably grow faster. Per capita incomes are also uniformly growing now, and therefore there will be more income in the hands of the consumer to be able to indulge in some of these things and to do some of this. More new houses, more areas to paint. So we feel the timing is correct.
What do you believe is your right to win here, apart from the distribution that is there? I mean, is it the promise of a Pidilite brand? Is it Haisha? We're just trying to figure out, why should a consumer buy a Pidilite?
The right to win first is our ability to reach where very few else can. Okay. The second is, we know the category.
Despite the others being actually quite big and well entrenched in the country.
In the country, yes, but in urban India largely, not in these parts, so on and so forth. The second thing is, at Pidilite, we always start with a better product. So and the wonderful thing is, the moment you say it's a Pidilite product, the acceptance, this whole thing from the makers of Fevicol, we've had very little resistance. Therefore, I mean, there is a strong equity to start from. I think all of this gives you enough of a right to win. I mean, forget, I can keep adding on other elements of the Pidilite secret sauce, but some of them should remain secret.
Again, it's a larger total addressable market, but it's also margin dilutive, right? The leader does slightly high teens, and that also under threat right now. You have a margin guided band of 20 to 24 odd %. Chances are that it might be margin dilutive.
Let's wait and watch. That's why do you pilot things? To exactly determine all of this? So give us another, by this summer, we will come back to you and tell you, okay, listen, what's exactly what we believe is the paint model, how it should go forward.
You have a fairly healthy cash balance. You are aggressive acquirers. AkzoNobel is on the block. You are one of the people who've bid for it. There are a lot who've fallen out of the bid because of valuations. Where do you stand on that?
We have no knowledge of any such bid. I read about it in the papers just as you do.
After you've made the bid.
On AkzoNobel, when we have something to report, we will. But as we said, listen, Pidilite is a conservative, very clear, value-based investor. We never flex our balance sheet. Just because we are cash-rich, debt-free, doesn't mean that we will ever splurge money. So when the right time comes, we will talk about it, but right now we have nothing to talk about.
As an asset, what do you think of it?
I see. What I'm saying is that there could be a personal view, so on and so forth, etc. So at the moment, there are enough interested fellows who have lots of thoughts about the assets. Let them give their thoughts.
And about the very near term, the consumer environment that we're in. Obviously, you guys have done your internal assessment of where Pidilite can be better, etc. But from an environment standpoint, what do you think needs to happen for growth to return, according to you?
See, in our view, growth will return. I think people have underestimated the impact of last year's elections and therefore the slowdown and the amount of time it took for the whole system to crank up, so on. For example, if you look at the first 3 quarters, which is what we've published, we're close to double-digit underlying volume growth, which is what we've always promised. So, I can crib and say that, listen, life could be better, urban could be, of course. But remember, in a country as large as this, there will be ups and downs. But now with this, recent budget announcements where consumers are seeing money in their hands, you're also seeing that the monsoon has been good, so April onwards money will come. Maybe the first quarter will not be a bumper quarter, but I think the India growth story is not going to go away.
The high-frequency data that you see on a regular basis for your company, what does that tell you about the consumer sentiment here and now?
So, Mangalam, I think we've spoken about this earlier as well. What we are beginning to see is a clear resurgence in the rural demand post the monsoon, a little bit. Albeit slow, but we are clearly seeing that pattern. As far as urban demand is concerned, I think in our sectors, Mangalam, and therefore now I'm talking about how we look at it, it has been where it comes to construction, where it comes to home improvement and so on and so forth, the demand has been quite steady. I'm saying the point is it could always be better, as Bharat was just saying. So I'm saying the point is we would want it to be a bit more better, a little bit more buoyancy. But having said that, I think we've been seeing steady this thing, and that's why we've been delivering steady returns as well, steady numbers as well.
And plus, if you look at it, the one thing that makes us also a little more hopeful is the real estate sector turned about 3 years back, at best 4 years back, but mainly 3 years back when you had a lot of things getting completed. We find that we get the maximum benefit of that in T+3, T+4. So a lot of the construction that has happened in urban India, etc., is all going to now come up for what you would call completion of interiors. And that's always, while even now repair and renovation is a larger part of our business than is new construction, this is a good multiplier.
Interesting conversation. In fact, what you can do is catch excerpts of this entire chat all day today only on CNBC-TV18. Take a short break, come back, focus on the markets. Welcome back. A bunch of stocks doing extremely well. The banks in particular, Kotak Bank has moved to the high point of trade, as has Axis Bank. All the financials actually are picking pace as well. So we have Bajaj Finance and Bajaj Finserv continue their gains from the last couple of trading sessions itself. So let's get you some ideas for profit coming in from our colleagues at Money Control Pro. And today we have Bharat Jinani joining in. Bharat.
The side is Senco Gold Limited. Despite the increase in the gold prices, the jewelry demand is expected to remain strong. Gold having an investment value and Senco Gold's positioning as a lightweight jewelry player bodes well in a rising gold price environment. We expect the company to deliver 18 to 20% growth in Q4. While the margins were affected in 9-month FY25 period, we expect the company to revert back to its historical range of 7% from the next fiscal. A better product mix and operating efficiencies is expected to drive the margin performance for the company. The company is on a healthy network expansion track and aims to open about 18 to 20 new stores every fiscal. The ramp-up of the Sensex brand, which sells leather bags, perfumes, and lab-grown diamonds, would be an additional growth figure for the company. Additionally, the market shift towards the organized segment is positive for players like Senco Gold Limited. Senco Gold is amongst a few quality and reputed players in the listed jewelry space. At the current market price, the stock is trading at a PE of 23 times FY26 projected earnings. This is a steep 30% discount to another comparable regional jewelry player, that is Sangama Jewelry. Senco Gold's current valuations are attractive, and hence we recommend investors to add the stock.
After that, we had the management of Senco Gold join us last week as well on CNBC-TV18, saying that after the big drubbing, the promoters are buying the stock from the open market itself. And we've seen that the stock has seen a fair amount of recovery all of last week from the lows itself. With that, we've come out of time on this edition of Chartbusters. Let's wrap it up. Stay tuned to CNBC-TV18 as Trading Hour comes up next. Thank you so much for watching.